Hey everybody, welcome back to the channel. So today I want to take a look at Traders Central Fund, and one of their main rules I think is catching a lot of people out, and that's the Martingale. Now when you look at their sort of clarifications on what you're allowed to trade, they say you can trade any style you like, but Martingale is excluded. But unfortunately the Martingale rule is slightly different by how they define it as, let's say, on Investopedia. Now the Martingale rule has its roots in gambling around roulette, and it's basically on a statistical outcome. So essentially what you're doing is every time you get a losing trade, you double the size of the lot size next time round, or the stake, and eventually the final winning trade will cover all of the losses and make a small profit. But the reality is, if you are starting on, let's say, with one lot, and you get a significant number of trades, therefore your next trade is at 2 lots, 4 lots, 8 lots, 16 lots, 32 lots, very easily you can get into a significant drawdown, and the cumulative losses takes you close to the max daily loss or your maximum overall drawdown. It is quite common that the Martingale rule is used on a lot of EAs. It's one of the ways that actually they show profitability. Now I've actually used that in the past. I've customized my own EA, used the Martingale rule, and I've used it on a live account, and yes, it did work. But you've got to have that faith that eventually the strategy will come good and you will get that winning trade. The probability says you will, but again, the emotions are taken out of it by using an EA. But the reality is you start looking at the trades and think, okay, do I start cancelling that now and starting again from fresh? Now when we look at the dashboard with Traders Central Fund, we can see that a lot of the rules are defined around minimum trading days, around drawdown, around max drawdown, and number of possible days. But the Martingale rule isn't really there as a classification, yes or no, as a breaking it. I think that's where the risk management team starts to come in, and a lot of people are still saying that their trades are not being validated correctly and they're losing the accounts by looking at the risk management team. Now I think overall the team has supposedly not been there, and if you do pass on the top rules you'll get the funded account. But again, the Martingale rule is very subjective, and for me it's much more of an averaging down rule, because the definition that these guys use is that if you are in a trade and you are in a losing position and you add another position to that trade, but the actual lot size is bigger than the original, so therefore going on a multiple, that's classed as Martingale. But if we take an example, let's say this week we wanted to take a speculative short on euro yen. It's quite high at the moment, we could be shorting it. Now we could go in, let's say, at a very small position, half a lot for example, with a very wide stop, expecting it to possibly go up a little bit more this week. But there's a significant advantage of a retracement coming all the way back down. Now that in itself is a valid trade, but let's say over the week it starts to go against us and we're in a loss. But we see a consolidation pattern and we start to see a potential for a breakout as the new trend starts to form, as the price starts to come down. And we go in, let's say, with a one lot rule, or one lot trade, and therefore it breaks that and gets into a profit. We close it out on our original parameters for that one trade and let our other long-term swing trade run. That is a violation of the Martingale rule. Although we had two separate trades, two distinct different setups, that would actually violate on this particular prop firm and therefore lead to losing the challenge. Now for me, I think it's key that we understand all of the rules involved with the prop firms. It's very easy to sign up because we think they are cheaper or easier to pass based on the criteria they're actually announcing, but it's looking behind the scenes to really see how do we actually have to trade, what our trading styles are, and does it actually violate the rules they've put in place. Now yes, very quickly we can see it's a Martingale rule, we know what that is, but the definition is different from this prop firm. So please be careful if you are signing up with them that you don't get caught out by this rule, because it is very easy to just forget about it. Just think, okay, fine, I'll average down a little bit, but that's a violation of the rules and you will lose your accounts. So I hope this video has been quite informative for you and it's actually been a useful video to watch, and I'll see you again soon. Cheers.